A sluggish session for the markets, and we end down in the red for the third session in a row. You're watching Markets Today, and I'm Reema Tendulkar, and with me is from the Delhi News Centre is Surbhi Upadhyay. Hi, Surbhi.
Hi, Reema. Well, no sign of bulls coming back on Dalal Street. Yet again, we continue to see that slugfest. There's a lot to talk about, lots of opinion coming your way over the next half hour. Let's first start with the headlines. Consolidation continues on Dalal Street with the benchmark indices falling 0.25%. The Nifty ends just around the 8,700 mark. Broader markets see setting pressure as well. Metal, healthcare and bank stocks lead the declines.
Midcaps see more pressure than the blue chips, with the midcap index falling 0.4%. Recent high flyers like Just Dial, ABG Shipyard and Nitesh Estate see profit booking. MTNL and HMT fall 11 to 20% as the government declares them sick units. Rice stocks like KRB, LT Foods, however, gain on hopes that India will resume the basmati rice exports to Iran.
Hindalco falls nearly 6% in trade as the CBI Special Court names Kumar Mangalam Birla, former Prime Minister Manmohan Singh and former Coal Secretary PC Parakh as accused in the coal scam. Hindalco maintains that none of its officials, including its chairman, have pursued any unlawful action to obtain coal mines.
And here are the experts that we've lined up for you on the show tonight. So some market perspective from Nilesh Shah of Kotak Mahindra Asset Management and S. Narain of ICICI Prudential AMC. From the policy space, Rajan Matthews of the Cellular Operators Association of India will talk about the balance sheet impact of the telecom auctions, and the Minister of State for Finance, Jayant Sinha, will tell us about the review meeting of the quarterly performance which took place between the Finance Ministry and the public sector banks.
All right, so all that opinion coming your way. But first, let's tell you what exactly transpired on the street itself. Equity markets stumbled for the third straight day as volatility continued to haunt Dalal Street. A sharp sell-off in late trade shaved off around 50 points off the Sensex. The Nifty also ended just around that 8,700 mark. That's a cut of about 12 points, but there was plenty of volatility in intraday trade, as the graph tells us. Midcaps were resilient for the last 2 days, but today they also buckled under pressure. We have Anuj Singhal now joining in with the day's trading highlights. Anuj, the caution continuing on the street?
Well, it was quite volatile. It was an untradable market today, honestly, both ways. If you'd asked traders, they would have told you that money making was just so tough. And this normally is the second phase of bull market correction, and that's what the market is going through right now. The Nifty kept swinging between green and red because every rally was being sold into, but because the Nifty is so close and right at the hugely important support mark of 8,700, every dip was also being bought. So it was really that kind of a market. Midcaps underperformed today, which was a bit of a healthy sign considering they had not really fallen as much as the Nifty. Advanced decline ratio was 1:2 today. Let's talk about the stocks then in today's trade. Metals. Now, some of these metal stocks have corrected 30 to 40% now from previous peaks. So big losses continue. Hindalco was down 5%, Sesa down 2.5%, Tata Steel down about 2%. Oil and gas, again from the commodity space, big losses in some of these stocks. KN, of course, was a bit news driven, down 3%. ONGC was down 1.5%, and BPCL was down 2%. So both upstream and downstream were down in trade today. On the gaining side, stock of this week by a mile is Bharti Airtel. That was up 5% today again, so up 12% for the week. Tech Mahindra was up 3%, and M&M was up about 2.5%. Some other prominent Nifty winners included stocks like HDFC, which had a bit of a relief rally today. Hindustan Unilever was up 1%, and NTPC was up about 2%. Finally, to the mid-cap space, let's start with winners first. You had stocks like Unitech, Fortis, Syntex gaining ground between 4 to 8%. On the losing side, though, there were a couple of accidents like Just Dial. That was down about 8%. In fact, it was down through the day. Then, of course, you had a couple of other names like MTNL and Spark losing ground. So, for now, it looks like the market is trying to take support at that 8,700 mark. But really, it's not looking convincing.
Thanks, Anush, for all those details. Time now for some market perspective. Nilesh Shah, the MD of Kotak Mahindra Asset Management, says the reforms announced in the budget continues to be the biggest driver for the markets in the near term. Listen in.
The budget has been well accepted by the investors. The domestic investors have found the budget to be credible, where revenue estimates are reasonable, expenses are fully provided, and the path to fiscal consolidation, as well as giving more resources in the hands of state government and spending money on infrastructure like railway and road, these are all treated positively. there are many things in the budget which is very good for the economy, but it hinges on the execution. Going forward, we think corporate earnings growth will accelerate. In FY16, our estimate is about 15% plus earnings growth. In FY17, we are hopeful of 22% earnings growth. So clearly, nowadays, it's more going to be stock-specific game rather than sector-specific game. The sheer top-down approach will not work. In some sense, the difference between large cap and mid cap valuation is very, very narrow, and which is why you feel more comfortable about large cap stocks outperforming in the near term, though over a longer period of time mid caps will outperform.
Okay, a quote of view on the markets coming in there. Let's move on now to all the action from the futures and options space. Nigel D'Souza has more details on that. Nigel, what was happening?
Well, the India VIX as the volatility index finally cooled off in today's trading session. It ended down close to around 2% odd. Now, in today's trade, if you were writing calls as well as puts, you would make some money. So the 8,800 call as well as the 8,900 call, as we've been seeing over the last few days, you made money if you were writing those particular strike, because the 8,800 call saw the premium fall from around 93 rupees to around 87 rupees. And on the 8,900 call, the premium fell nearly around 25% from around 16 bucks all the way to around 12 rupees. But take a look at that. The Nifty ended down by close to around 12 points today. But even put writing made you money, because the 8,600 put, the premium didn't go higher. In fact, it fell down by close to around 3 bucks. And the 8,500 put as well did see a marginal dip on the premium from around 34 rupees to around 33 rupees. And importantly, that's where the highest open interest is on the put side. That's telling you that's where the base comes for the Nifty, at least in the near term. Individual stocks that one focus, Bharti Airtel saw big buying in today's trade. Idea as well was high by close to around 4%. Open risk build up being seen on that counter, buying being seen on both those two counters, while on Hindalco, we did see selling pressure. The stock ended down by more than 5%. Big open risk build up as well, telling you that there was selling on that counter. Reliance Communications did come in for a short covering bounce, and Century Textiles, after the sharp correction, that stock in fact is looking quite good. Big buying being seen on that counter as well. Unitech, a very volatile trading session counter normally, but that one in fact did see big buying in today's trade, was high by more than 5%, while on Just Style, the stock ended down by nearly around 8%. Shorting was seen on that counter.
Thanks, Nigel, for those details. On to some stock-specific news now. Hindalco was one stock that was hammered in trade today, down over 5% after the special court today named industrialist Kumar Mangalam Birla and accused in the coal block allocation scam and issued summons. The former Prime Minister Manmohan Singh and former Coal Secretary PC Farag have also been named. Hindalco has issued a media statement, and I quote, Hindalco reiterates that none of its officials, including its chairman, Mr. Kumar Mangalam Birla, have pursued any unlawful or inappropriate means for securing the allocation of the coal block. Hindalco will study the order of the trial court in detail and would defend its case through the legal process. The company's management is confident that it will stand vindicated at the end of the ongoing legal process. End of quote.
All right, on to the latest coming in from Parliament. The Modi government's push for reform seems to have hit a massive roadblock. A united opposition has cornered the centre in the Rajya Sabha. Yesterday, the Mines and Minerals Bill was sent to a select committee against the wishes of the government, and looks like the Land Acquisition Bill could be headed the same way. The Lok Sabha has passed a diluted version of the Land Acquisition Bill. The government made 9 amendments to its bill, hoping to appease the opposition, but the centre refused to bring back the all-important consent clause. Rima?
All right, moving on then. On to the telecom space. Telecom stocks continue to be in focus on the 7th day of the spectrum auctions. Experts say that the auctions are likely to end in a day or two. However, the industry body COAI sees a significant hit on the telco's balance sheet due to the aggressive bidding that we've seen so far.
This is going to mean a significant hit to the balance sheet of these operators, and so going forward, as you indicated, there's bound to be pressure, upward pressure on tariffs as operators try to normalize the earnings from the operations to generate the cash flow to meet these prices that have been paid for spectrum.
Of course, despite those concerns, telecom stocks were up and about in trade today, gaining anywhere between 2 to 4% on hopes that the worst of the uncertainty in terms of regulation is probably behind the sector, with the auctions almost drawing to a close. Let's move on now. Finance Minister Arun Jaitley today held a quarterly performance review meeting with public sector bank chiefs and financial institutions. Apart from defining the RBI's new criteria for NPAs, MOS Finance, that's Minister of State for Finance Jayant Sinha, says the issue of rate cut transmission to customers was also discussed.
We obviously had a discussion about RBI's actions, and Mr. Mundra was here as well, and we tried to understand exactly how the banks are thinking about this, and the banks pointed out what they've already done, which is that as far as retail loans are concerned, they have already brought down rates a fair bit, and so we discussed that. And then secondly, with respect to the question of their strategies, we said exactly what we have said in the budget as well, which is that we will be setting up a bank bureau, and the bank bureau is going to work with the banks on appointments, on performance and strategies for them, as well as their capital raising plans. The Reserve Bank of India has put in place a very good framework for dealing with non-performing assets. Each of the banks has adopted that, and they are moving forward in that regard. With respect to the stressed assets and other situations where it does require coordinated action across the various different banks, we have joint lending fora that are established, and so there is now quite a bit of coordination and a lot of work that goes into figuring out what's the best way to deal with each of the loans that are stressed.
All right, so that was the all-important meeting of bankers with the finance minister. Let's move on. The government is looking to garner the support of states on the coal ordinance by leveraging the allotment of coal blocks. CNBC TV 18 learns that the centre has delayed the allotment of around 43 coal mines via the dispensation route. These were mines that the government was supposed to allot to various state agencies. Anshu Sharma is now joining in with this report. Anshu?
That's right. On March 7th, the central government was supposed to publish the result of allotment of 43 coal blocks which were supposed to be dispensed to the state-run companies as well as PSUs. But the government has missed that deadline as well as today's deadline, where the government was supposed to sign the agreement with the allottees. Sources in the government have told CNBC TV 18 that the government is looking at allotting these coal mines post the coal mine bill has sailed through Rajya Sabha. The central government wants the state governments to come on board and help the coal mine bill to sail through Rajya Sabha. Remember, till now only Lok Sabha has passed the coal mine bill, and the centre is yet to get a majority in the Rajya Sabha. 43 coal blocks were put up for allotment via government dispensation, of which one coal block was meant for the steel sector and rest 42 meant for the power sector. Back to you.
Thanks, Anshu, for all those details. On that note, it's time for a short break, but coming up on the other side, Sudarshan Sakhani joins in for a technical chat, and we'll also get you some trading ideas. Stay tuned.